Good morning. This is Manuel Vargas with Keller Williams Realty Landmark 1 and 2 in Queens. And today I want to share with you our Queens, New York real estate market update of the first quarter of 2021. I'm going to do two videos because there is a lot of information I want to share with you. And so we're going to start with the first section of this video, where we're going to look at some general economic trends and national trends. And then on the second part, we're going to do a review of the statistics for Queens, particularly Queens County. So let's just start with the general national numbers. First of all, we have to look at the GDP. The GDP growth, or general domestic product growth, was really good, rebounding to the levels of 1 year ago. Year over year, the GDP was up 0.4%. So basically, almost at the same levels of last year in the first quarter of last year. So recuperated really well. The next statistic I want to bring your attention to is the new private housing units authorized by building permits for new residential units. Building permits for new residential units are at a record and basically went up to a level not seen since 2007. So new construction of residential units is ramping up. With that came the fact that lumber prices and construction material prices went up a lot, as many other things are going up in price because the economic activity is picking up and inflation is picking up a little. Everything is going up in price, gasoline, but particularly lumber prices because of the economic activity and because of the new permits that are at a record level. Another bright spot of the economy, especially within the battered commercial sector, was warehousing. Warehouses, because of e-commerce, are a very bright spot. We predicted that at the beginning of the year. It's an exception within the commercial sector that is still trying to come back because retail, was very affected by the pandemic. Restaurants were very affected by the pandemic, but warehouses did really well because of the pickup in e-commerce and online shopping. Then we have to look at what happened to interest rates. Since the beginning of the pandemic, where interest rates, 30-year mortgage rates, were at an all-time low, basically at 265% for a 30-year mortgage, right? Interest rates have come up quite a bit. At the end of March, according to Freddie Mac, the rates were 3.18% or about 0.53% higher. This is a big increase, and we saw an effect on the demand a little bit at the beginning of the year, where some buyers were a little bit shyer with, in high price markets, especially in Queens, in the multifamily market that is affected by other uncertainties. This increase in interest rates, cool off the frenzy that we saw in other markets. So definitely we saw an increase in rates, and this is affecting to a certain extent, not completely or not totally, the demand in real estate. It's affecting the buyers, especially at a high price points where houses prices are $1 million or more. Then this difference in interest rates all of a sudden make a bigger difference. Then we saw also a decrease in the level of refinance applications. Why? Because there is a lot of people that already refinanced in the past, got excellent rates. Number one. Number two, because the rates went up, so this demotivates a certain part of the eligible applicants not to maybe refinance because there is not enough of a difference, but basically because a lot of people refinance already. As far as the purchase applications, the new applications for mortgages for people that are buying a property, those went up and those are expected to go up as the as the sales transactions continue to go up. What happened to the prices for residential real estate in the nation, nationally? This is not Queens, this is the entire nation. According to Redfin, home sale prices went up 70% year over year. Last year, in the first quarter, the median price of homes sold was $287,750. That went up this year at the end of the first quarter to 335,613. I'm sorry. So from 287 to 335, that's a huge increase, 70% year over year nationally again. When we look at what happened county by county, we have to know that prices went up the most in suburban metropolitan areas, meaning suburban areas close to big cities where people move out of the big cities to these suburban areas. Now, when we start looking a little bit more at Queens, what happened with this increase in prices is this benefit a lot counties like Suffolk, counties like Nassau, to a lesser extent than Suffolk, because in Suffolk we have the Hamptons, and people, wealthy buyers from New York City went to luxury markets like the Hamptons. So this increase in prices was concentrated in these suburban areas, namely for the metropolitan areas of New York City, Suffolk, and then Nassau. What happened in Queens, Brooklyn, and the Bronx? That the prices year over year almost stay the same. In markets like New York City, Manhattan, prices went down. Then if we look a little bit upstate, the brightest spot was Ulster County, where median prices went up year over year at a rate of 9%. Okay, so that is regarding the prices, the median prices year over year. Then when we look at New York, there is something called the New York City Recovery Index, something put up by Investopedia, that looks at several factors. It looks at hospitalizations due to COVID, unemployment insurance claims, pending home sales and rental inventory, and then subway activity, subway ridership, and open table reservations or restaurant reservations. This index is stating that in February of this year, New York City is back to 44% of normalcy, meaning all these factors combined are, almost back to half, 50% of the normal levels in New York. So in general, we can summarize by saying that the national numbers are very encouraging. GDP, new construction, residential permits, prices year over year nationally are very encouraging. Economic activity is also making rates increase a little bit, which is putting a break on the appreciation on the most expensive markets. And then when we look at New York City, Manhattan was the county that was the most affected. Queens, when you look at the prices of median home prices year over year, was almost the same, maybe up a little bit. We're going to look at the numbers in the next video. And Suffolk County did very well. Nassau County did very well. Ulster County, I've said, did extremely well, right? So this is the summary of economic activity related to the real estate markets nationally and in the New York metropolitan region. and we're gonna dive into the numbers for Queens. Stay tuned. Thank you. Hello, this is Manuel again. Now I have my glasses so I don't have to squint at the little numbers. And without further ado, we are going to talk about the numbers for Queens, the real estate market in Queens for the first quarter of 2021. First of all, I want to explain you what happened to the contracts, to the pending transactions, the number of contracts that were signed. Basically, in the first quarter of Queens, the median price for pending transactions, not closed transactions, was higher and ended the quarter 8.4% higher than last year. So that's very good news. This price of pending transactions was 619,000 and it was higher 8.4% as compared to the first quarter of 2020. Okay, as far as the number of contracts were lower both in January and February. So there were much fewer transactions in January and February as compared to last year. But in March, the number of transactions were 8,961 contracts signed. This is up by 7.7% as compared to March last year. So it shows that the market in Queens is recuperating. Very encouraging. Those are contracts, pending transactions. Now we look at closings, the actual closing prices. The actual closing prices, the median closing price in Queens have been going up the whole quarter. January was up by 6%, February was up by 6.4%, and in March was up by 6.8%. But I want to call your attention to something very interesting. The median price in Queens for closed transactions, which was up by 6.8%, was 630,000. The median price in March for contract for the price of the median price for of houses that went to contract was 619,000, also higher than last year, but lower than the actual closing price. So houses are closing at higher prices, median prices, than they are going to contract. This is showing that the market is recuperating by cooling off. Maybe the frenzy is mostly gone in Queens, and the market is leveling off because the median price of closings is 630 and the median price for contracts is 619. By the way, all these statistics are going to be in the nice slide show, in a nice video that I'm going to post in YouTube and in my website, and you can look at these numbers in detail. But for closings, for the units of actual closed transactions, they are down year over year. They were down 21% in January, down 21% in February, and down 16% in March. So the number of sales are still below levels of last year, the number of actual closings, but they are recuperating from 21.8, 21.3 below last year to 16.6 below last year. So they are slowly recuperating. Okay, that is for contracts and closings in the entire Queens. Now keep in mind that we're looking at the entire Queens, and within Queens there is different submarkets. There are submarkets for the different areas, and there are submarkets for the type of property. One families is a certain market, two families is a certain market, and we're going to look into that in the next couple of minutes. But also there are differences in different zip codes. If you are curious about knowing the statistics for a particular zip code, please contact me. I will look into your particular zip code, because for example, I live in Fresh Meadows, and the market is quite different to the market in Corona, where there are many more multifamilies, when in Fresh Meadows we have more single detached homes. So all these differences affect the market. We are looking at the entire Queens market, and this is what happened. Now, as far as negotiability, the percentage difference between original price and final sales price. I can tell you that in January this difference was 5.3%. In February it was 5.6%, and in March it went down to 4.2%. So negotiability is going down. It shows that inventory is tight. We're going to look at that in the next slide. It's tighter, maybe not tight, but tighter or lower, and buyers have less room to negotiate the price from an asking price to a final sales price. We are not seeing average, full prices or above asking prices in Queens like we're seeing in Long Island or the suburban areas. Queens is a little different. We have many more multifamily houses, and there was that exodus of people to the suburbs. So Queens is basically mostly recuperating. As far as inventory, we can say that in January, the inventory of all residential units, including co-ops and condos, was 6,744 units, which at the current rate of sales is basically an inventory of 7.4 months. But that decreased in February to 5,447 units, which is an inventory of 7.1 months. And it decreased further in March to 5,437 units, which is an inventory of 6 months, which is a much more balanced market. So we're going from a buyer's market more into a balanced market, not quite a seller's market yet, but more balanced. So we have 6.2 months of supply, which is traditionally more of a balanced market. Then we are going to look at what happened to rentals a little bit. So New York City is one of the counties where the year-over-year median rent went down the most. I think in the nation, the most affected market was San Francisco, but then we have New York City, meaning Manhattan and the 5 boroughs, where the median rent went down 18.4%, almost 20% below last year in the first quarter of 2021, according to Realtor.com. With that came a bright spot that a lot of leases were signed. A lot of people started taking advantage of those lower prices to start moving back to the city, or they started moving from one apartment to another apartment. So a lot of leases were signed because the prices were lower, but also companies started calling people back, and these lower prices started being taken by renters as opportunities, and we will see in the following quarters that probably year-over-year median rents are recuperating. Also, when we talk about renters, we have to talk about the eviction moratorium that was extended first to June and then to August. That is putting a lot of pressure in landlords, especially small landlords, because some people are not paying the rent, and some small landlords need these rents to cover their mortgages. So this is also affecting the market for investment properties. Then, as far as the foreclosures, the moratorium on foreclosure also was extended until June, meaning banks cannot start foreclosure yet. At the end of the second quarter, beginning of the third quarter, we will see a change in this, with probably more foreclosures coming into the market, which is sad for communities, but banks are forbidden from starting foreclosures until June. So we don't have any distressed sales. We don't have any short sales right now or any foreclosures. So a lot of investors that do flips or buy and fix and flip properties are not doing a lot of business right now because there are no foreclosures. And then I want to end by looking at the market for the individual type of properties, residential properties in Queens, meaning let's look at one families, then let's look at two families, and then let's look at 3 and 4 families combined, and then let's look at condos and co-ops. Why I set it up like that? Because the markets for one families are different because they are basically homeowner occupied properties. Then two families are different to one families because they are owned by a combination of homeowner occupied properties and then investor properties. And then I look at 3 and 4 families differently because 3 and 4 families are mostly investor properties. And the final group that we're going to look at is co-ops and condos because they are different in the respect that they attract a different type of buyers. They have different qualification requirements. They have other layers of regulations for financing and for management. So I look at condos and co-op in a separate group. But for one family properties, we saw that the close price was higher by 6.8% to 715,000, right? So one family properties went up a lot compared to other properties. As far as the units, the number of transactions for one family properties, they were still lower at the end of the quarter as compared to last year, but improving. They were 18% below in January, 16% below in February, and 14% below numbers in March of last year. So numbers are still below transaction numbers, but close prices are higher. For two-family homes, the improvement was a little bit less pronounced. The year-over-year price ended at 890,000, which is 1.1% higher. And the unit numbers, the number of sales was at the end of March 19% below March of last year. For 3 and 4 families, the situation is very different. 3 and 4 families ended in March at a year-over-year price that was lower 2.4% than last year. So the price was actually lower, whereas in one family was higher, in two families was higher to a lesser extent. In 3 and 4 families, the price was lower, and it was 1,232,500. As far as transaction numbers were improving, but were still lower. They were still lower by 20%, but they were improving from 31% below in January, 34% below in February, and 20% below in March. But prices year over year for 3 and 4 families lower by 2.4%. As far as condos and co-ops, I found remarkable that prices recuperated to 2.2% year over year to a median price of 335,000. This surprised me because a lot of people left this kind of shared living situations, condos and co-ops, for the suburbs. But co-ops and condos recuperated quite well to 2.2% higher. As far as units, the number of sales in co-ops and condos were lower 17% year over year, but also starting to recuperate because they were lower in January by minus 24%, in February minus 23%, and in March it's minus 17%. So they are still below what they were a year ago, but recuperating. But the prices were up 2.2. So the brightest spot was one families, then two families, then 3 and 4 families are still ailing, still affected. Co-ops and condos still did better year over year. And as far as transaction numbers, in all categories, we are below. Remember that if you require a free market analysis for your property, you can always contact me, 917-559-2002. I hope you enjoy this first quarter 2021 market update. Thank you.